Then look, as money supply flattens and starts to decline, we have this. The problem is that this action here is down money supply while we have been rallying. And that again is problematic. That tells me there's something brewing here.
Today we have Gareth Soloway giving us his latest update and prediction for Bitcoin, cryptocurrency, and how the economy is preparing for a market meltdown. Soloway says a recession is now inevitable due to rising costs for goods and services, stagnating wages, poor business growth, and an increase in layoffs. Because of all the panic selling, some people think the stock market is about to fall. It is incredible how much value of the global market has been destroyed in the past few months alone, and the financial system is now in danger. Soloway believes the market is going to make a hard landing and then a severe correction to follow, indicating that a massive shift in crypto is coming as well. The correlation between the stock market and the Fed money printer is becoming more evident now. And with the current economic downturn, it looks eerily similar to the crash of '08. Let's get right into the latest interview with Gareth Soloway as he talks about what investors can expect with crypto, stocks, and where the economy is headed in the next few months. If you enjoy the content we do here on this channel, don't forget to hit the like button and subscribe.
But look at that. That's interesting, 2008 and 9.
So you can see this little bit of an uptick here in 2008 and 9, where money supply started to pop, and then we got this follow through in the markets where all of a sudden the markets popped. And then you can even see the matchup over here where another little blip up in 2011, and then that leads us after this collapse down into the next bull run in the markets up. And so at least from my perspective, the divergence can't last forever. At some point, the markets have to come back in. But I do think that there was so much money on the sidelines because investors were so worried about a hard landing. And now everyone feels like they missed the boat, that they're all chasing. And that's creating this divergence where people are saying, hey, listen, we're going to have this beautiful soft landing. Everything's going to come up roses. And so they're willing to kind of chase stock prices up at these levels. And I'll show you another thing that definitely is a bigger and bigger concern of mine, ignoring the trend lines, but just looking at the yields. All right, you now have the 10-year a full 1% plus lower than the 2-year. And that, again, I mean, historically, that's something that has to raise alarm bells from investors. That, again, that if you look historically, that signals something down the road. But I agree with you. I think there's probably enough liquidity in the market to keep us from anything major until the end of the fourth quarter. But I do think we're due. I mean, either way, markets have gone parabolic. VIX is so low now that no one is expecting any issues. And that's usually when we see some issue. And by the way, last weekend, we almost saw something, right, that the market wasn't expecting, which was the attempted coup in Russia. But by the time the markets reopened, everything was all good again.
Let's take a look at NASDAQ and see what you're thinking there. I mean,
for the NASDAQ, a couple things to just keep in mind is you have a little bit of a parallel channel formation here, where if we drag this down, and this is kind of what we're retesting now, but what we can see here is that the low end, look at that. You have the pivot low and pivot low on the downward movement aligning perfectly with the pivot here, pivot and pivot. So again, this is a big level for the NASDAQ. It's not to say it can't get through that level, but it is a level that I'm very closely watching to see, can we push through? Now, interestingly enough, on Apple, everyone talking about the 3 trillion valuation today and very fairly talking about it. You can see you have a parallel channel here, and we have actually gone just a little bit above that channel. So that is interesting in and of itself. But I do want to just point out to people that Apple is above its double top from 2021 by a decent amount, but market cap wise, it's now hitting a double top. And the reason is because you've had so many share buybacks going on with Apple that the market, like if you look at the market cap of Apple, now it's finally back to the same market cap it was right back here, which again, I look at that and I say, okay, is that a double top on the chart of market cap, and is that more important? So big test next week also for Apple in terms of that double top market cap $3 trillion factor.
You're thinking gold's going to break out?
Yeah, so usually with triple tops, so double tops are the most bearish, right? Double tops, you get the biggest pullbacks. Triple tops, you usually get more shallow pullbacks and then a breakout. So for me, it's the triple top is okay, because essentially it's what you're doing is you're hammering on a doorway. Here the doorway's forming. Here you try to break it down. It's too hard the first hit. Here's the second hit over here. Now it's getting weakened. The doorway is weakened. Usually by the third or the fourth hit of that line, it can break out. What I liked about this chart and why I actually picked up some GDX in the Verified Investing Alerts trade signal service at In the Money Stocks, and we picked up GLD, is because this pivot to this pivot was a classic retrace to what I call the scene of the crime. It broke out, hit double top, and retraced right to that. So that is to me, that's a bullish setup where I would expect this now to climb back to those highs. Yeah, it's a nice chart. And again, one thing about gold is it's not a sexy thing in terms of it's not going to make you a 10x or a 5x in a short amount of time like a crypto or maybe even a stock can, but it also takes risk away to the downside. You're not really worried about gold dropping 30, 40, 50% on you. This high to this low, 22% drop. And that's pretty dramatic. I mean, that's for gold, that's a big drop.
Yeah, that's a big drop. And that was, that's when the markets sold off. All was happening. That was the Russia invasion timeframe, all that.
Right. That was the period when the dollar was just soaring. If we look at the DXY here, that was when the dollar was up here at these highs. And so that's another factor to just keep in mind, is that as soon as the dollar put in a top, that was gold's bottom, and gold has rallied all the way since then, basically until the recent pullback. Now it brings up the dollar chart here too, which is very interesting because you're kind of in this tightening wedge pattern. The question is, do we break down or do we break out on this chart? And that obviously will have implications for gold, crypto, as well as stocks. Generally, this pattern is a breakdown pattern. Doesn't guarantee it, but about a 60 to 40 probability that this would break down. We've heard so much about the de-dollarization aspect and more about it. I think for me, it's a very longer term play where, the dollar will break and then it will go down, but it's not as volatile, obviously, as what we're used to with crypto. That's for sure.
Yeah. Cool. So are you still in the camp that we're not going to see, all-time highs in any of the indexes in 10 years or so?
I still am. And I'll tell you why. The way I'll be proven wrong is that if we basically take out all-time highs in the next month, 2 months, 3 months, well, then I was wrong, no doubt about it. But take a look at this. This is actually something fascinating, and just going to more price action. So if we take, again, that high to the low, and we drop it down, 37.5%. If we take it back to the high, 37.5%. But look at this, 41% drop from peak to trough, then a 41% rally before the bigger rollover occurred.
With a recession looming overhead, Soloway believes the framework for the bottom of the market is being built right now, and in the next 30 days, we could see that come to fruition. The following months will serve as a clear indication of what to expect from the stock, crypto, and capital markets, despite the fact that they may currently be driven by fear. The regular consumer will be the one most impacted by this recessionary environment, and the credit and housing markets' financial corrections are another issue to watch out for. Loan interest rates are rising quickly, and Soloway thinks we could be witnessing a bubble there as well. What do you think about Gareth Soloway's prediction for the crypto and stock market? And will we see a major correction in the next 30 days? Comment down below. Thanks so much for watching. Don't forget to like and subscribe. We'll see you in the next video.